one of the things that's worth mentioning. Everyone focuses on how good gold has done and laments at silver's performance. And I think that's part and parcel with the way that we expect markets to behave these days, where, we've seen such massive increases in prices that happen so fast in tech and in crypto that we don't really notice. But look, silver's rallied by over 100% since its low in 2020. It's up, 105, 110% from its low point of under $12 an ounce. And I think that probably comes as a surprise to people who are just following silver kind of passively, watching gold at $2,400 an ounce. Silver will have its day, no question about it. And I think, guys like Warren, I'm sure they notice very well and understand very well gold and silver and probably have a significant position in it, just don't tell the world about it.
Gold and silver markets are facing a pivotal moment as Andy Schectman issues a cautionary message to investors. While gold continues to outperform, rebounding quickly after price drops, silver has quietly surged by over 100% since its 2020 low. Despite this significant rally, silver remains undervalued and largely overlooked. A mistake, according to Schectman, who sees substantial upside potential. The global economic landscape is increasingly fragile, with the strengthening Japanese yen triggering margin calls and cascading sell-offs in various assets, including precious metals. Schectman suggests that this sell-off might not just be a reaction to market conditions, but could also be part of a larger, more deliberate effort to suppress the prices of gold and silver. However, this strategy, he notes, is becoming more transparent to the investing public. Interestingly, even as gold and silver prices have dipped, Schectman reports a surge in investor activity. Savvy investors are seizing the opportunity to acquire these precious metals at what they perceive to be bargain prices. Gold, in particular, has proven resilient, bouncing back swiftly and reinforcing its status as a safe haven, especially in times of currency devaluation. In Japan, gold has skyrocketed in value, with a 38% increase in yen terms over the past year, underscoring its role as a reliable store of value. The disparity between gold and silver's performance is stark.
That things are beginning to break, and they realize that a sell-off like this often happens counterintuitively. I never know what to make of it. People say the conventional wisdom is that you throw out the baby with the bathwater in order to meet, for example, margin requirements. And if you look at the unwinding of the carry trade, it would certainly, with the yen strengthening the way that it has been, it would elicit margin calls on these levered positions. And whether or not it's people selling their gold and silver because it's so highly liquid, or it's just the cartel's way of continuing to step on things to make the perception of gold and silver being the place to run, kind of trying to sever that relationship, which is more along the lines of what I think people are seeing through that. The tricks and the methods that have been used for a very long time, I think, are growing long in the tooth, and they are becoming far more transparent to the investing public. And I would say today has been one of the busiest days we've had in months, literally, maybe even going back to last year when we had the banks fail. People are not dissuaded whatsoever. In fact, I think they're quite incentivized to see the value that is found here in a price that just got, clubbed. Although it's interesting with gold, it's back above $2,400 and only down a little bit right now. The futures I show only down $23.50. They were down as much as 70 plus earlier this morning. And so I think that this is a short-term knee-jerk reaction, but I don't think we're out of the woods yet in any respect as to how this all plays out. One other note, I think it's important when we talk about what gold is doing, and when you look at it in the light of Japan, where it looks like, by all intent and purposes, the wheels appear to be coming off. 10 years ago, an ounce of gold was about 140,000 yen. 5 years ago, it was about 150,000 yen. That's a 7+% change in 5 years. It was 200,000 yen in 2020 and roughly 250,000 yen in October 2022. In 18 months from 2020 to 22, the price of gold went up $25 in yen. It spiked to 278,000 yen in July of 2023. And as of just the other day, not too long ago, just a couple of days ago, we were over 383,000 yen. That's 38% increase in 1 year. So you can see as the yen has really gotten into trouble, gold has done what it is supposed to do, and it has gone much, much higher. So I'm not worried about where gold and silver end up. I think this knee-jerk reaction is exactly the way our clients are reading it, and it's a subsidy, it's an opportunity. What we're seeing is a currency that's collapsing, and all the intervention in the world, what it perhaps has done is prick the everything bubble, and that's kind of the way that it looks like right now with everything getting clobbered. I think one of the things that's worth mentioning, everyone focuses on how good gold has done and laments at silver's performance, and I think that's part and parcel with the way that we expect markets to behave these days, where we've seen such massive increases in prices that happen so fast in tech and in crypto that we don't really notice. But look, silver's rallied by over 100% since its low in 2020. It's up 105, 110% from its low point of under $12 an ounce, and I think that probably comes as a surprise to people who are just following silver kind of passively, watching gold at $2,400 an ounce. Silver will have its day, no question about it. And I think, guys like Warren, I'm sure they notice very well and understand very well gold and silver and probably have a significant position in it, just don't tell the world about it. They make their money he makes his money on equities. And so I understand that, but I think for him to expect him to not understand it. Look, gold has outperformed the S&P 500, even with dividends reinvested, for 25 years. It's averaged 9.9% compounding since the beginning of the century. That's outpaced just about anything Warren owns. And I think it would be foolish to assume that he doesn't own any. He may not talk it, but when you have the wealth that he does and your influence is centered around, traditional assets and securities in American corporations, that makes sense to me. But don't be surprised if he and others like him have nice stashes of gold and silver physically held safely away somewhere to protect even his large stack of cash. So I guess we'll have to see if he's going to add any to Berkshire Hathaway, looking for a value. You sure think he'd find some in the mining shares. I know he's added mining shares before. I don't know. I haven't looked lately to see if he has any in there now, but geez, I couldn't think of a better place to find value for a value-based investor like Warren.
While gold has been the focal point for many investors, outperforming the S&P 500 over the past 25 years, silver's impressive gains have gone largely unnoticed. Schectman believes this presents a unique opportunity for those looking to capitalize on silver's untapped potential. Schectman also speculates that high-profile investors, such as Warren Buffett, may quietly hold significant positions in gold and silver as a hedge against market instability. The idea of revaluing gold, possibly to levels as high as $20,000 per ounce, is being floated as a less painful alternative to inflation or default scenarios faced by heavily indebted Western nations. Such a move could trigger a global scramble for gold, with far-reaching implications for currency and asset values. Geopolitical tensions further complicate the outlook. Schectman warns that escalating conflicts in the Middle East, particularly between Israel and Iran, could send oil prices soaring above $100 per barrel, with gold prices likely to follow suit. The global
balance sheets across the globe are held in an account called the gold revaluation account. You can't even make that up. The head of the Dutch National Bank has been the one talking about this a lot lately, saying that gold is held to start over from the ashes when the economy breaks. He also says even though their balance sheet is upside down, they have 20 billion euro in gold in the revaluation account. My thought after reading that is if they want to, revalue gold a little bit to create the strategic reserve, why not revalue it a lot and recapitalize, the federal debt? So we have like what 260 plus million ounces, and at $20,000 an ounce, that's over $5 trillion that you put into the TGA that the Treasury could use to buy back much of the long end of the bond market that's getting clobbered. I don't know that they're going to do that, but I think it's something that is being talked more and more and more about by central bankers, by policymakers. So wouldn't surprise me to see something like that happen. Everyone talks about the horrendous debt burden that all these Western countries are in, and we are, and they are. But to realize that there's inflate or default, I talked about finding a villain, Putin and Xi Jinping, and using the dumping of dollars and treasuries that we have incited as a rallying cry and pointing to a villain that resets the system. But number four, the option of revaluing gold is probably the least painful of all. And I wouldn't put that past any country right now or group, G7 versus BRICS or whomever it would be that would think about this. Because really, what is something worth but what someone or some group of people are willing to pay for it? And if China said gold's 20,000 an ounce right now, that's what we're paying. You know, anything that's literally not stapled to the floor would be pried up and sent over to Beijing, where it would be arbitraged versus the Western price. I think it will happen. I don't know to what degree or who starts it or how it all plays out, but it's I think too much of a pink elephant in the corner of the room to not be really noticed by the politicians. So yeah, I think these are very interesting times that we should expect to see some interesting things play out as this yen carry trade, which has kept the system afloat for a long time, seems to be breaking down in real time. And what does that mean with the unwinding for asset prices, largely that have been distorted through the low interest rates and this carry trade environment that could very quickly, as all of these big hedge funds are getting margin calls and have to unwind, it could really create havoc, at least for a while, in the global market. So I guess we'll see how this all plays out. But yeah, this is one of the most interesting days I can remember in my career, at least in terms of what we are seeing and what could be based upon all of these factors. You're talking, strife in the Middle East, craziness with the political situation, the geopolitical situation, the economics of it all, the divisiveness in the country. There's just so many things that are starting to spiral that I think now is the time for people to really buckle up and start to pay attention to what's happening. And yeah, gold and silver are on sale right now. But I will tell you, although premiums haven't visibly gone higher, my bet would be that they will start going higher almost immediately based upon the kind of interest and concern that we're seeing from our clients, and some very large orders in the past few days, starting over the weekend, really, with all of the war drums rattling. I guess if I were going to make a prediction on how things could get out of control very fast, if Israel is attacked by Iran, look for them to attack their nuclear facilities, which they've been talking about for 2 or 3 months, and look for them to attack their oil fields. You could send oil over 100 just like that and watch gold go with it. That's how tenuous things are. A couple weeks ago, we were a half an inch away from disaster or chaos versus relative calm. The whole system, the whole ecosystem is kind of balancing on razor's edge right now, and something is going to trigger it. Something is going to incite all of this to play out. And maybe this is the beginning of it, the unwinding of the carry trade. Seems too simple to me, but I guess we'll have to see, Chris. And I've never been more adamant that, it's getting late in the day for people to protect themselves, because yes, it's cheap. Yes, it got hammered. But that's exactly the atmosphere that we've seen over and over and over and over again. That very quickly just eradicates availability, puts great delivery delays on product, and premiums shoot right back up from what I would tell you is...
The global economic system, he asserts, is balancing on a razor's edge, with any disruption potentially unleashing significant market volatility. As the yen carry trade unravels and hedge funds face mounting margin calls, the distortion in asset prices caused by years of low interest rates is becoming increasingly apparent. Schectman urges investors to act quickly noting that the current dip in gold and silver prices presents a rare buying opportunity. With premiums on these metals likely to rise and market conditions growing more precarious, now may be the time for investors to reassess their portfolios and secure their positions in gold and silver before the market dynamics shift once again.